Ever wonder what happens when that mortgage term clock ticks down to zero? Do you throw a party, get a badge of honor? Or maybe you're pondering about what that word your friends have tossed around called refinancing. Well, let's dive into it. I'm Ryan with Blue Coast Realty. Today, we're diving deep into the world of mortgages, renewals, and refinancing, and other options when your term ends. All right, so first up, every time a mortgage term ends, it's kind of like a financial birthday. You're at what's called the maturity date or the renewal date. Now, you won't get a cake or candles, but you do get some cool options. First is renewal. Think of this as continuing your current contract. If you still owe money, you can renew it with your current lender, but you're almost always going to get some kind of different rate. Second is refinancing. This is a big revamp. It's also the third R in the bird method for those interested in investing. Or maybe you want a better interest rate, or you want to tap into some of that home equity for that fancy renovation. Refinancing lets you make changes to the amount of you owe and the length of your repayment period. So if you're in a better financial position, you could go from 25-year amortization down to a 15, which means you pay less interest in the long run and you're mortgage free sooner. Or if things are maybe a little tight right now and you have some expenses, you can always stretch that out a bit longer, which could save a few $100s a month if you pay a lot of interest over the long term. Third, you have the option to switch or transfer your mortgage. Don't love your current lender? Give them the boot and move your mortgage somewhere else that makes more sense for you and makes you smile. Your fourth and final option is, well, just paying it off. But you always gotta check to see if there's any repayment penalties, because you might not be worth doing it if the penalty's too high. Now back to refinancing. If you're thinking that BRRRR method sounds great, by refinancing, you could borrow against your home's equity. In case you forgot, your equity is the market value of your property, aka what it would sell for into the current market, minus the remaining mortgage balance. So if you've been living in your space for a while and the value has shot up, you could borrow against that increased value. That cash can be the golden ticket to a down payment for a new property. So while we're on this topic of refinancing, using your home's equity, refinancing isn't your only option. There's also things called home equity line of credit, it's a HELOC, which is like a giant credit card almost. And there are home equity loans, which is like a lump sum. Both are borrowed against your home's equity, which can also be used as that down payment. So we're just at the end here now, and remember, every time your mortgage terms up, it's really an opportunity for you to renew, refinance, switch, or pay it off. The world's really your oyster. Thanks for watching, and welcome home to the Blue Coast.